Hello my fellow freedom builders and welcome back to the channel. In today's video we are going to have a look at a company called Bloom Energy, and this is in our series about hydrogen stocks. And yes, you might think that Bloom Energy is not really a hydrogen stock, and you might be right. But they're working with fuel cells and they have begun to take in hydrogen as a power source. So I will claim that they are a bit into this space and into the alternative energy. So we'll have a look at it today, what they do, if they're profitable, and if it is a good stock to invest in. So remember to subscribe, like, and comment. All of you commenting are of course a part of the competition to get a price of a silver coin, 1 ounce silver coin. So subscribe, like, and comment. That is important to support the channel. Let's get straight into the topic of the day. Bloom Energy is a company that maybe many of us are not really that familiar with, and one of the reasons is that they're not really selling products to us retail users here, customers. They are mostly a company delivering to industries. I know that the founder had a vision that here in 2020 we should all be having Bloom Energy products in our houses, but that has not really been how the company has gone its way. So what they do is they produce these energy power sources. They take a fuel cell, we'll have a look at that later, put it into a stack, put that or several stacks into a server module, make this energy servers, and then put them into power systems that can power an entire company or a small city or something like that. So that's basically what they do. They are making these small power grids so the large companies can, if they are located in a company with unstable power source, electricity grid, then they can make sure that they have their own source of electricity so they don't experience these power outage. So let's have a quick look at their investor presentation here. I like to go through that just to get an idea of what they are actually doing. So just remember, when you look at an investor presentation, that is the sales material. That is the information that the company wants you to get. So it might actually not be that accurate, or there might be some details there that have been left out. And believe me, in the Bloom Energy case, that is just the case of information being left out. But let's get back to that just in a second. So when we scroll down here, we can see that their mission is make clean, reliable energy affordable for everyone in the world. Yeah, that could have been said for pretty much every company in this alternative energy sector. This is just fluff and inflated words. We have the Bloom Energy Server. That is their main product, and that is a modular fault-tolerant architecture. So it is really meant and designed to be able to run in storms, hurricanes, earthquakes, everything, and that is absolutely an advantage. Mission critical reliability, no downtime for maintenance, converts abundant natural gas or biogas to electricity without combustion, and also hydrogen, I should say, but in this material they just mentioned natural gas and biogas. So that's great. What they are saying, and that is actually correct, is that the current electricity grid is a structure that is 135 years old, and that was meant to deliver electricity, of course, to our homes, but also to the, you could say, the old industrial complexes that were gathered together in one geographical space and not scattered all over the country. And there's a lot of things here that definitely, where they do have a case, they say that it is unreliable. A hurricane or a wildfire or something like that, like the one seen in California lately, they actually are a big risk to the electricity grid. So if you have a company where the power is crucial to running the business, that could be a medical facility, it could be some internet-based things, any of this sort, then of course the electricity is crucially important. So they are saying here that they have their Bloom Energy servers here, and they're comparing how much space it takes up. And that is also fair enough to say. Let's say I have a company in the financial sector in downtown Manhattan, Wall Street. Of course, I cannot have a huge solar power plant stayed in the middle of Manhattan. That would be way too expensive. Then instead I can get some natural gas delivered. I can put it into these energy fuel cells here we'll have a look at just in a second, and they produce all the electricity I need. So that is fair enough. Of course, the comparison not completely fair, because the natural gas also comes from a plant somewhere that takes up space just as the solar cell. So if you, instead of having the Bloom Energy stacks here, had the some batteries from, let's say, Tesla or another provider, then you could just get the solar energy from some solar panels located outside the city. But that is just a minor detail here. Now, what they are doing, the basis of their business is they have these solid oxide fuel cells. And if you have seen my other hydrogen videos, you know how this works. We have a fuel cell here built of an electrolyte in the middle, and then an anode and a cathode. And here you're sending natural gas or hydrogen when they're using that in the new products, sending that in with some air, and all of that produces electricity, and that is where we get it. So they don't really have a battery with stored electricity, but they have some biogas or natural gas or hydrogen stored, and they are sending this into the fuel cells producing electricity, and then they can use that in the production. And it is very reliable. There are no moving parts here. There's no combustion. There's nothing like that. So it is very, very smooth and well functioning. No doubt about that. I'm not doubting their overall product, but there are something I doubt here. Yeah, these are some comparison where they are comparing themselves to how the transistor developed into finally a data center, and they are taking the fuel cells into power centers. So that is a bit of sales material. Looking at this is actually their main selling point, if you ask me, because here we have the power grid, and once in a while there are some power outages, and with this reliable source of energy, where you're producing your own electricity, then you don't have these power outages. But you could say the exact same thing if you had a big stack of batteries standing outside your company and have loaded them up with electricity, then you had the exact same setup as this. Now, lower and predictable cost. We have the grid electricity bill here, and we have the Bloom electricity bill here. And this, of course, shows us that you are saving a lot of money by producing your own electricity. Now, there is this number 2 here that, of course, we notice. And with very, very small, tiny letters here, it says specific to the market served by Bloom Energy. Because as we shall see in a Forbes article just in a second or two, this is not really the case. Actually, the Bloom electricity bill is way higher than electricity in most places, but they are just they're cherry picking what markets they're looking at here. So they're saying, yeah, in the markets we are selling at, where the grid electricity is very high, you can see we are cheaper. But at the overall space, and in many of the countries where they're trying to sell the systems, where they have very cheap solar energy, wind energy, then this is absolutely an insane comparison. There should be the grid electricity way below the Bloom electricity. But I guess that's how it is. They have some structure here, how they're building it. And of course, this is the cases where they really shine through: the hurricanes, earthquakes, utility outages, physical damage and fire damage. And they have protected customers from almost 1,200 grid events since 2018, and I suppose these are some sort of grid events. Proven track record, yeah, they have saved a lot of companies from these power outages. That's great, and they have some very fine customers among their on a list here. They have financial and educational, they have medias and so on. So they have quite a lot of products out at the customers. So when you remember me analyzing companies like that could be Nikola or some other companies where they are saying they'll sell something, but they haven't really produced the products yet. You cannot say that about Bloom, because they are actually producing it, the customers are using it, and they are getting feedback and data back. So that is great, no doubt about that. Then, of course, in every single investor material here, they should show you what kind of global market they are tapping into. And this is the global market for electric power in 2016 at $2.4 trillion. And of course, Bloom Energy they will not even have a tiny fraction of a percentage of this. But anyway, of course, that is standard in these sales materials. There's a lot of data here of how they're expanding. And it is true that they are growing their customer base quite rapidly. However, as we're going to see at the numbers just in a second, they haven't produced a profit yet for something like 80 quarters in a row or something like that. They're simply still burning money after 20 years, which is not that impressive. You can see that their sales model is that it is direct sales. And what they sell is they sell products and installations, and they sell the contracts for the fuel cells. That could be biogas, natural gas, or hydrogen. And the customers can buy them, they can lease them, or they can make some power purchase agreement here. So that is basically the models. They're making money on the installation and on the fuel for the system. So that is pretty much it. I'll link to this in the in the description of the video here, so you can see further and read further for yourself to see what you think of the numbers here. Let's just go straight into Stockopedia, where we can see that the quality of their earnings and the value is quite poor, but the momentum is great, and that is because the price has gone up quite rapidly. And you can see pretty much the only green dots we have here is in the price momentum. When we look at their earnings per share, that has been pretty stable, just plain horrible. And then I know the estimates are showing a bit of an upturn, but they have had these estimates before, and as I'm going to show you, they have made a couple of tiny calculating errors in their numbers. So here in the spring, I think in February, they had to tell the investors that they simply just had a huge hole in their pocket because they have made some accounting errors. So that was not so nice for the investors. The free cash flow is in 2019 positive, but is dipping down again. The net debt, well, they're just piling on debt, so that is not a good look here. And you can see the interest coverage is negative, meaning they cannot even pay the interest on the borrowed money. So they have to borrow new money to pay just the interest. So they cannot even pay off the debt, and they cannot pay the interest of the debt. They have to borrow money to pay the interest of the debt. That is definitely not a good sign. However, you could say that in a tech startup, and they are burning money and so on, it is normal that they are piling on some debt. Yes, that is true, but still this company is something like, 20 years old or something like that. So it is quite amazing. I think they had their IPO in 2018, if I'm not mistaken. So a couple of years ago they went public, but they have been running as a company for, I think it is almost 20 years, and they have not produced a single quarter with a profit. So this is not a new upcomer just finding the market and finding their legs in the market. This is quite a seasoned company, not being able to produce a profit, even though the investors had poured almost, I think it is $1.7 billion into the company. However, they do have a Petrosky score at 6, which is amazing. But when we know how the Petrosky score is structured, there are some of the points that are a bit easy to get here. As you can see, the Altman C score is way down in distress. So that shows us there is a significant reason for this company to go bankrupt. When we're looking at the graphical history here, we can see that the estimates are that we are growing in revenues. That's great. Growing in net income, well, maybe. And normalized earnings per share. I'll see this before I really believe it, because they have been saying this before and not that has not come true. As you can see, the analysts are downgrading a bit here. So if we're looking into Guru Focus, pretty much the same bleak picture here, but what I do want to show you is, well, first of all, what I do like here, Guru Focus, they are having these warning signs. There's one good sign, 4 medium warning signs, and 4 severe warning signs. And when we're looking at the severe warning signs, long-term debt, keep issuing new debt. That is not great as an investor, to have a company that just keeps pouring new debt in, because they might grow their revenue, but as long as they have a negative margin, that doesn't really help with a lot of revenue, and it will get harder and harder for them to pay the interest. The Sloan ratio shows a poor quality of earning here. They have a loss in operating income. Some insider buys, and I'm not really sure why they say this is a good one. I'll show you this in a second, because there are not many of these insider buyers. Then the financial strength is poor. The Altman C score, as I showed you, is in distress. Revenue per share is declining. Price to sale ratio is close to a 3-year high, which is not that good. And when we go down here and look at the insiders here, let's just have, yes, this is for the last year. You can see that this is insider sells. And I suppose this one is the one they say, yeah, that is a good sign. We have some insider buy here. Yeah, well, great. We have had a ton of insider selling. And when I see this picture, it just tells me to run away screaming. I'll simply not invest in a company where the insiders are selling in bundles. That's how it is. So just this picture tells me quite a lot. But let's go on. I have some more details. I have some articles from Seeking Alpha I'll link to. Bloom Energy is losing ground in the clean energy industry. What this article, very interesting article, is about is that they are simply, they're having a hard time producing energy at the at the cost that is necessary. I'll show you that in a second in the Forbes article as well. But what they also tell us is that the price of batteries and Bloom Energy is really competing against batteries, because if you have batteries, you can put electricity in there from the grid or from solar panels or from fuel cells or whatever, but then you have the electricity stored. Whereas with the Bloom Energy, you are producing the electricity and sending it straight into it. They don't have a battery to put onto it. Of course, the bad thing with batteries is that if you want to have the electricity standing there for a long time, then batteries are slowly losing the energy. Whereas in the Bloom Energy case, you have the, let's say, natural gas or hydrogen that is not really losing any energy. I know with the hydrogen you actually are, because you have to store that under pressure or very, very cold. So that is also eating some energy there. But as you can see, according to Bloomberg, battery prices have fallen from $1,100 per kilowatt hours in 2010 to 156 kilowatt hours in 2019. Meaning that they have been cut down pretty much 80-85% in price. And this was actually the reason why Bloom Energy really came on strong and got a lot of investors in the beginning, was that batteries was so crazy expensive. But now the battery price have fallen and Tesla is just hammering the prices down. So this will pretty much be cut in half in, let's say, 5 years. And every time a dollar goes off this, Bloom Energy has a harder time competing. So that's how it is, and you can read all of this. Bloom Energy is making a big move into the commercial hydrogen market. The company joins other large fuel cell companies like Plug Power. You've seen my video the other day maybe about Plug Power. But the thing with Plug Power is that they were vertically integrated, so they produces pretty much the electrolyzers and the hydrogen and the trucks using the hydrogen and the tank stations and everything. So they got it all combined in one package, whereas Bloom Energy is pretty much just producing this the power stations here, the mini grids, but they're not producing all of the stuff around them. So they have been entering this hydrogen market, and I suspect that is because a lot of countries are aiming for boosting their hydrogen society model, and that is kind of great, even though that the hydrogen is more expensive to produce, and even though the hydrogen is dropping in production price, so is just normal alternative energy sources like solar and wind, which is also dropping rapidly. But you can read the article here, but it basically says that they have a hard time competing with battery tech. So that is that article. Then we have another one here, and that is about their little tiny accounting error where they, let's just see. Yeah, here it is. They had to tell the investors that they Bloom expect to report a decrease in net revenue here and some increase in operating losses, and all of this because they simply overstated its top and bottom line by up to an aggregate of $180 million and 75 million respectively on the bottom line. So that was kind of a bummer, and not really the kind of thing you want to go to your investors to tell them. Then we have an article here, and that is about fuel cell builder Bloom Energy continues to the streak of business match errors and lack of profit. That's also about that, both the accounting error and their 76 profitless quarters here, which is quite amazing, at least in the space right now where they have been developing their products for the last almost 20 years. Then, of course, there is the Forbes article that I will not go completely into detail with, but the Forbes investigation, how Bloom Energy blew through billions promising cheap green tech that falls short. This is one of the founders, and what they're telling here, they're telling a bit about the company, about this Sridhar, which is one of the founders here, the guy in the picture. And what they are saying is that Bloom has never generated profit despite at least 1.7 billion of investor capital, some of which has raised on the back of false statements. And now, just to say right away, this is not an article in the same space as the Hindenburg report on Nikola. This is not a complete groundbreaking, company-breaking report. But there are some serious issues down here where they are taking on, for instance, the price that they say they can produce electricity at. For instance, down here, but like other fake it till you make it techies, Dor and Sridhar acted like Bloom already had it all figured out. In a TV interview with Leslie Stahl on 60 Minutes in 2010, they touted Bloom boxes as the future of clean green power generation. The Bloom box is intended to replace the grid. It's cheaper than the grid, it's cleaner than the grid, Dor told Stahl. And press conference soon after, Sridhar told reporters that the box could deliver power at 9 to 10 cents per kilowatt hour. That was simply not true. In 2010, they produced at 19 cents per hour. They had a few customers, 1 or 2 customers, something like that, where they actually succeeded in the 9 to 10 cents per kilowatt hour. But the average customer in 2010 simply paid double the amount as they stated in 60 Minutes. And still now, with all of development and research, they are down to 13.5 cents. And then they get in some states a bit of a knockoff due to some environmental credits. But they are still not down at the 10 cents here. And what they're saying is that in many of the areas where they're trying to sell this grid solution, that could be in areas in Northern Africa or several places in in Asia, they actually can produce solar power energy in the area of 4 to 6 cents per kilowatt hours. So they are not really competing on the price actually, even though they're telling the investors that they are. Then there are some environmental issues where they're saying that they don't have any of the polluting stuff coming out of their products. For instance, we have something about hazardous waste here. When Bloom applied for its operating permits in Delaware, it answered no when asked whether its system would generate any hazardous waste. When in 2014 regulators started asking more questions, Bloom disclosed that its filtration system caught a host of nasties like arsenic, benzene, sulfur and lead. and that acquired why it had been shipping its hazmat out of Delaware to processors and incinerators across the nation without following rules, Bloom's replied that it thought it was exempt because it didn't open the canister. So what they actually said was, we're not producing any hazardous waste, but what they actually did was they were producing hazardous waste, but they were just shipping it out of the state, so they thought that didn't count. So there are some irregularities here, and as you can see, it's quite a large article, and I have double checked some of the facts here in the Forbes with other sources, and it seems to be true. At least several sources say pretty much the same. So I'm not saying that this is a company breaker. I'm just saying that they're not really doing exactly what they say in their sales material here. They're not as cheap, they're not as clean as they're claiming. That doesn't mean there isn't a space for them, but combined with the fact that they have been trying for almost 20 years to produce a profit, and they haven't, even though they have scaled up. The question is, how much more do they need to scale up? They do have the biogas and the natural gas solution. Now they're getting on with the hydrogen, but still the hydrogen is not really competitive towards just other solar, wind or gas, natural gas produced electricity for the grid. So the question is, where do they have a market? Will they really be competitive in any of these markets? And I can doubt that a bit. I'm not a big fan, as you might hear. I have some other articles here. Also, they are getting in quite a lot of new customers, and they have quite a nice backlog of orders. So it's not that they are not having orders. The problem is they're not making money on the orders, and they might be getting a harder and harder time competing with just battery stacks from, for instance, Tesla. And I know, because many of you have written me in the comment section in the other videos and said, yeah, but Hans, remember that research and development and hydrogen is getting better and fuel cells are getting better. Yes, that is true, but so are batteries. And if these fuel cells and the hydrogen is not getting a huge breakthrough, like a groundbreaking, a revolutionizing breakthrough, then they will be, of course, researched and developed, but so will the batteries. And I have a hard time seeing how these fuel cell technology can really be competitive with the battery space. But then again, only time will tell. Just to wrap up, I'm not a big fan of Bloom Energy, I must say. They are, in my case, too narrowly focused. They are not vertically integrated like the Plug Power. I'm a way bigger fan of Plug Power than I am of Bloom Energy. So if I had to choose, I would definitely choose that. If we're looking at a quick price chart here, we can see on the weekly chart, we can see that we had the IPO here, and they dropped. They were up at 37, and then they were down at 2. So that also tells you a story here, I guess. But then we can see on the chart patterns here that it started to bottom out. And funny enough, that was quite this at the same time when Nikola really were big on the big hype here. And well, this is actually not the worst formation in price. This does look like the big buyers are coming in. And if we're looking at the daily chart, well, then they have been going sideways for a while here. And if we just have a quick line here, we can see that they are in some sort of formation on the daily chart where the sellers are coming in, then the buyers. The selling are getting out a bit earlier than before, but then the buyers are getting in a bit earlier than the other buyers here. And this is narrowing down, and at some point it'll break out of this triangle, and that is usually a good indication of the price trend in the following days and weeks and months. So if it really breaks out here, what I would be looking for if I were to enter the Bloom Energy, which I'm not, I'm pretty sure, that would be a breakout, a drop back to test this line, and then some buyers getting in here. So I would not get in until it went up to around 2022, somewhere here. But still, there are definitely companies in this niche, in this sector, that I would be looking at before I would be buying Bloom Energy. But that again is just my opinion, and you might think that is completely crazy. That's fine. I'm not a financial advisor. You should always make your own do your own research before you invest. And it is fine to listen to YouTube videos like this, but it doesn't really beat doing your own research. So take care of yourself and your money out there, and you can look into the company yourself. I'll talk to you again very soon. Remember to subscribe and like, and bye for now.